What is going on, everyone, and happy Nvidia Day. Nvidia saved the market after announcing a record quarterly revenue of $57 billion, a $31 billion net profit, which was actually one of the largest quarterly profits ever reported by a US company, and most important of all, after raising their outlook, signaling accelerating demand. In today's video, we go over what to know and how the market is setting up to have a crazy day tomorrow. Let's get right to it.
The largest company in the entire stock market just reported record revenue coming in at $57 billion, beating the $55 billion estimate by around 3%. Of course, EPS ended up beating as well. And whenever we look at these numbers, EPS and revenue were up over 60% year over year, EPS being at 60, revenue being at 62%, as Nvidia continues to impress. And one of the biggest things with Nvidia was their outlook here. Yes, their guidance actually came in at $65 billion for the fourth quarter. That beats a $61.66 billion expected revenue there. So that is a great beat there on the guidance. And what this really did is it helped subdue fears of an AI bubble. I know that Jensen Huang, everybody was looking for him to put on his cape today and really come in and save the stock market, because stocks have been falling down, as many people know, for the past few weeks. And so far, that has been the case. Whenever I look at this a bit closer, it's even so good that he's saying that Blackwell sales are off the charts and that cloud GPUs are actually sold out. We should be getting more clarity coming soon from the conference call, what he meant by sold out there. But nonetheless, this is a huge report for Nvidia, and traders are obviously loving it, given how much it's risen in after hours, popping around 5%.
Beautiful. So as we can see, Nvidia is already moving higher, and it's also directly helping the S&P 500, which it desperately needs. If this report came in bad, that could have been a rough sign. But Tom, just like we covered yesterday, Nvidia has a tendency to kind of whipsaw after earnings. So that is one key thing we have to look out for tomorrow.
It really is. Like on the last earnings report, of course, Nvidia didn't dip, or it didn't pop right away like it did this time, popping around 5%. It actually fell down, but you can see the next day it was whipsawing all around before ultimately continuing to the downside. On the May 28th report, we can see it actually popped up, but notice how the next day it gave back a lot of those gains, and actually over the next couple of days gave back all of the gains, coming back to test that support close to 134 at the time there. So just keep this in mind whenever we think about Nvidia's price action. Remember what happened back in May whenever we popped up, but then ultimately ended up selling back down. That might not be the case this time. There might be enough bullish strength to keep it going. Obviously, each earnings report is separate, and that's why earnings are so exciting. But it's definitely a good sign, though, to see it moving in the right direction so far.
Definitely. So as we look at Nvidia right now, are there any key levels that are on your radar for tomorrow, or like anything to like really pay attention to? I know we're getting closer to that $200 resistance.
Yeah, 200 is critical, and even in after hours here, I'm really loving this 194 to 196 zone. Nvidia has bounced off of this zone a lot and has really broken down below this range multiple times in the past. So I will be watching this zone very carefully. There's been a lot of hits and bounces close to this 195 to 196 point, but if we can really break that, I'm definitely eyeing up $200 next. There has been a lot of bounces there, and it will be an insane psychological level, and who knows, maybe we'll get enough momentum that it ends up breaking 200 over the next few trading days. But $200 is going to be the main level to look for. If we break that, look for more momentum. If we do end up pulling back, I think 190 is going to be the main range that I watch for. If we start to break under that, we'll be below a pretty key 191 support as well, and I think that would be good confirmation back to the downside.
Perfect. And this report was huge, especially for an update on the state of the AI industry. But Tom, as we know, there's also going to be a lot of eyes on Walmart tomorrow, because they're also going to report earnings, and they're going to give us a good read on the state of consumer spending, which is the main engine of the American economy. And guess what? They're also going to report before open tomorrow too. So definitely keep a close eye on Walmart for tomorrow. This will be interesting. Of course, it won't be as crazy as Nvidia Nvidia, though. And then, Tom, we had quite the shock today with the interest rate outlook. So what is going on there?
Yes, the federal interest rate decision is up in the air for December, and people have been really eyeing up the possibility of a pause happening. And today, we can see that on the Kalshi odds, there was a clear, and I mean very clear, shift to the pause side. There is now a 68% chance being priced in that the Federal Reserve will maintain rates at its current pace. That is a pretty big deal whenever you think about it, especially considering how critical these rate cuts have been for the market. A lot of people have been actually pretty bullish throughout 2025 because of rate cuts, and now we're not getting near as many as people had once thought would happen. So this is a very big deal. Keep this in mind. And one of the biggest reasons that this actually happened today is that the BLS ended up coming out and saying that the October jobs data won't fully be released. They ended up saying that some of the data, especially the household data, could not be collected, and that's a pretty big deal. That means that we're only going to be getting the non-farm payrolls coming out, and then also they're going to be releasing it with the November reading. So it's going to be extra delayed now out to December 16th. And that's going to be right after the next FOMC interest rate decision and FOMC interest rate meeting as well. So it's going to be a wild next few weeks and few months, Mike, as everybody tries to really figure out what's going on here with the Federal Reserve.
Exactly, because the market has been pumping and investors want those rate cuts to keep this bull run going, but we're seeing a divided Fed now, and it's kind of heartbreaking to see the prospects of a rate cut on December 10th kind of just get priced away. So it definitely hurts, but the market's holding up fine for now. Nvidia definitely helped out quite a bit. But talking more about the jobs report, we have that coming out tomorrow. So what's going on there? What time's it releasing?
Yeah, so things are pretty confusing right now, but keep in mind what we just talked about. Whenever we talked about the other data releasing that the BLS was talking about, that is the October jobs data. So keep that in mind. We are going to be getting the September non-farm payrolls releasing tomorrow morning, 1 hour before the market opens at 8:30 a.m. Eastern time. So be ready 1 hour before open. We could see a lot of volatility, especially if it shows that the jobs market is weakening. If it shows that, it might push the Feds more towards a cut. But at the same time, if the jobs market is strong, it'll really solidify a pause being priced in. So between this going on and Walmart and Nvidia earnings tonight, I can't wait to see what happens in the market tomorrow.
Seriously, yeah, we should see some really good volatility. And speaking of the market, as we look at SPY, it's holding up good in after hours. What are you seeing on the charts, and what are some key levels on watch for tomorrow, not only to the upside, but also to the downside?
So whenever I look at the SPY this week, there was a low posted around 656. I've really had the 654.50 to 657.50 range on my radar for a few days now, and we ended up bouncing right in between there. So what I'm really watching for to the downside is a good break below this range, as well as a break below the low of day today, which was closer to 660. If you're looking at a more of a scalp trade tomorrow morning and the market does pull back, really watch that 660 zone. I think once that breaks, we'll definitely be testing that low of the week, if not even breaking it pretty soon at that point. But for right now, that low of the week is starting to hold up as a really good area of support, and 660 is acting as a really good base too. So as long as this base keeps holding up, watch resistance overhead closer to 668 to 670. This is going to be a very critical range where if the SPY can break through that, I would have a lot more confidence tomorrow morning for a better continuation up to around 674 to 675. I really like that 674, 675 range overhead though. There was a lot of resistance there at the end of last week and early on this week. So really watch that. That was the high of pre-market on Monday.
Sounds good. So let's keep this close on watch. And as we know, especially over the past trading week or so, we have been seeing a pretty meaningful increase in volatility. So for example, if we go to the VIX, we can see that it has been rising quite a bit. And what this is essentially representing is market makers pricing in bigger moves in the future. And this almost always goes hand in hand with the downwards movement in the market as a whole. As we can see from that October 10th sell-off, the VIX had a big pop with that. And when we zoom out even more, we can see the VIX popped up big time when we had that Liberation Day tariff crash back in April. We've been seeing the VIX creep up again, and right now it is right around this $23 dollar price point. And we can see from this data here that generally speaking, when the VIX is in like this 23 to $24 area, the forward returns for the next 12 months on the market aren't the strongest. So this is one thing to keep in mind as we are seeing elevated VIX levels. But one good piece of news that we do have, though, is the time of the year. And that is basically at the end of November, we do see a pretty strong bump on average.
Yeah, we definitely do. And I know that there's a lot of people out there right now that are very fearful about the stock market because things have been going down. Search terms have been at record highs for AI bubbles. And I think people are starting to catch on to that situation. But whenever we think about it, this is a very strong time of the year. And there's going to be a lot of traders looking to buy up the dip right now. And, for all the dip buyers out there, this is definitely something to keep on your radar. Of course, there are some good discounts in the market right now. Some stocks might still be overvalued, but we never know how long this wave is going to continue rising, and Jensen Huang definitely helped it tonight. That is for sure, Mike. But whenever we talk about a lot of the data in the stock market, we have seen a lot of concerning data lately regarding delinquencies. Today, we're actually seeing commercial real estate office CMBS delinquency rates jump up to 11.8%, the highest level in history.
My Lord, yeah, this is crazy. And it goes to show that, especially certain areas of the market are getting hit a lot harder than others. Like, it definitely hurts when you have commercial mortgage-backed securities have delinquency rates that are higher than what we saw after the financial crisis of 2009. So it's worth being skeptical, but at the same time, it's also necessary to see all of the good things happening in the market as well. So we'll continue to monitor this situation. And besides that, Tom, how about we jump right into some setups and predictions? A stock that is close on my radar is LOGI, and it is to the downside. There was a recent big money trade with this one, just around $1 million for the 115 strike put options that expire pretty soon on December 19th of 2025. LOGI has tanked recently, which is great, but I think it can fall even more. While it doesn't necessarily have to be red tomorrow, I think until expiration, there's a good chance that this stock can fall even lower. And I think it would be great to see not only a test, but a breakthrough that $100 support level. It's on my radar for a potential continuation, but at the same time, I wouldn't be all that surprised if we saw a slight pop up over the next couple of trading days, which might offer some good swing opportunities. Either way, LOGI is on my bearish radar.
Yeah, that is quite a start to this big money trade. That sell-off today was pretty insane with Logitech, so I will be watching it very closely in the short term as well. With my first stock today, I'm actually looking at MU to the upside possibly. So MU's been dipping a little bit, and what I'm looking for is an upside continuation play tomorrow with Nvidia. Now, MU is starting to break through some pretty good areas of resistance that I was watching very closely around 237 here in after hours. Now that it's breaking through that, I'm going to say 240 is my next big area of resistance. And if we can actually break out through 240 tomorrow, I will be watching for that continuation to the upside, and I'll target 250, maybe not necessarily tomorrow, but for the next few days as a possible target. So I really like the way that Nvidia is starting to move right now. A lot of chip stocks have been selling off a lot recently, and if we do start to see a buy the dip scenario play out, there can be some great scalping opportunities mixed into those overall bull runs. So I'll be looking for that. Of course, if Nvidia opens up tomorrow and starts flying back down, like we've seen in the past, then it might be a no play. But if we do see that upside continuation truly take hold, this could end up being a good opportunity.
There we go. And my next play is actually kind of an exact opposite one in a more broader sense. And that is with ticker symbol SNDK. This is a stock that we've been looking at in a bearish sense over the past week or so. And like we mentioned yesterday, this Nvidia earnings report was a big risk to this potential downside play. It's still on my radar for a potential drop lower, but I'm liking the play less now that Nvidia is moving up in a strong way after reporting earnings, I still think there's a chance that this one can roll over even more and really sell off. But with Nvidia ripping like it is now, that is that brings a wave of momentum that is hard to fight against. What I do like with Nvidia is that it does have a tendency to whipsaw quite a bit, like you showcased earlier in the video, Tom, where like Nvidia could have like these big, strong initial moves off earnings, but especially like over these past few earnings releases, they are pretty volatile. So SNDK is still on my bearish radar. But the more Nvidia rips up, the harder it will be to justify trading SNDK down. Either way, it's close on watch.
Yeah, and who knows? Maybe we'll wake up tomorrow morning and Nvidia will bounce off 200 and go flying back down, and SNDK will end up being just fine. But I'll definitely be watching it as well, Mike. If we start to re-break some of those good support levels, it could definitely sell off in more of a crazy way. And even as it continues to rise, you know, it'll still provide a good opportunity in the future. I did want to mention though, Nvidia is actually almost getting to $200 as we speak. It's already there as it has continued in after hours, breaking that 5% initial move that it first had. But with my next stock, I'm actually looking at Tesla to the upside for a possible continuation play as well. I like the way that Tesla's been dipping recently, and I feel like that especially with some optimism coming into the market, we might start to see Tesla move a bit better. There is a good lower trend starting to play over the past couple trading days that we bounced off of again today, and as long as that holds and Tesla can break through 412 tomorrow, I'll be watching it up. If we go to the Bookmap, you can see that there's a lot of sellers stacked up between 410 and 412. If we break 412, I'll be watching for a move towards 415. Plus, there are some sellers at 415, kind of similar to that 412 area. But again, there's a lot of momentum in the market right now, and we could end up breaking some of these sell walls. But if we end up breaking 412, definitely look at that 415 level next. Again, this is more of a continuation play with Nvidia. If Nvidia shifts, we always have to adapt.
There we go. All right, well, let's jump right into today's momentum plays then. And with the first one, we have the Global Uranium ETF, ticker symbol URA, to the upside.
This stock was making a great comeback today. If it can break out above $46.60 tomorrow, watch it to the upside.
All right, with the next one, we have Bloom Energy, ticker symbol BE, also to the upside.
I love the move by BE today, and it's actually approaching a big area of resistance in the short term. If it can break 118.50, watch it to the upside.
And then with the last one, we have Lucid, ticker symbol LCID, to the downside.
Poor Lucid's not sharing in the love today, but if Lucid ends up dropping down under 12.35, watch it to the downside.
All right, so we have these three stocks on the radar for potential continuations tomorrow, if and only if they break through the levels listed. These stocks are volatile, so you need to protect yourself. Whether you trade one of these three stocks or anything else, focus on making smart, long-term oriented trading habits. If you need help with that, check out the Key Lessons channel in the StockedUp Discord. It is completely free. And besides that, let's jump right into today's $1.18 million big money trade, and we are looking at none other than VLO. Today, the trader here bought the 165 strike put options that expire on January 2nd of 2026. The trader here is risking around $1.18 million to make around $8.69 million. Clearly, this is a very asymmetric risk-reward style trade, which is great. Of course, this comes with a lower probability of winning. The stock needs to fall quite a bit for these put options to be in the money. This company is an international manufacturer and marketer of transportation fuels and petrochemical products. Basically, we are seeing more weakening in the market and the economy as a whole right now, which can present some risks to this stock. For example, a slowdown in economic growth, especially if the holiday travel drops or like if consumers just pull back in general, that can make transportation fuel demand lower and in turn weaken refining margins. At the same time, the stock has been doing pretty well, which is another thing worth keeping in mind, but very, very interesting setup.
It really is. VLO has been on fire here, and I wonder if the big money trader is looking for a pretty stark turnaround with how much time that there is, given it's a couple months out. I do think that there could end up being an opportunity to get to 165. 165 is actually a very large support where VLO had recently bounced on the way up, and it only took a few weeks to really get up to that point from like the beginning of November to where we're at right now. So I will be watching this very closely. If it does end up turning over a little bit, in the shorter term, like if we go to like an hourly chart, I would really like to see a confirmation below this like 176 to 175 zone. I think that could be a really good level to maybe, if you're not into the big money trade yet, maybe wait for a break below, maybe wait for that confirmation and just that extra, just little bit of added confidence for you. But at the end of the day, it's an interesting setup. It's a pretty large one as well, Mike, with $1.18 million into it. Just the main risk is that strike being 165. They could be shorting this, but at the same time, I mean, you never know. We've seen big money trades that have been very far out of the money end up going in the money way quicker than anyone would have ever thought.
Exactly. So either way, we will keep this close on watch. And if you are new to the channel, welcome, and definitely consider obliterating that subscribe button. Every single day we cover multi-million-dollar big money trades just like this one, the most important news, information, earnings, upcoming events, historical stats, and basically everything you need to know about the market. It takes us a long time to make these videos, and if you subscribe, you'll get them recommended to you more often. So definitely consider doing that. And let's also give a giant shout out to today's member of the day, Min Sung, in the StockedUp Discord, who had some very nice profits today with some SPX put options. Huge shout out to you. Keep up the great work going forward. It is awesome to see posts like this one. If you guys are into short-term trading, definitely check out that first link in the description and the comments down below to get in on the StockedUp trading floor. There was some really good action with our surge bot today, where we saw some Google calls pop up by 260%. Netflix puts by 110%, CRCL puts 103%, MSTR puts 84%, the list goes on and on. There were a couple duds sprinkled in as well. You get full access to our weekly live events, which is actually tonight. You can chat with Tom and myself all day long, get daily access to the big money trades that we talk about basically in every single video, but you get access to them early, and you have the ability to like search for only the best performing big money trades and see when the traders are in the trades and when they exit them. Plus so much more. If you're into short-term trading, it's the place to be, and you can save quite a bit with the coupon down below, so definitely check that out. But thank you all so much for watching, and let's crush it in the market tomorrow.